Thanks for tuning into Stocks with Antonio. I had to get on here Sunday evening, even though I'm fighting the flu, it's still beating me up. Let me know down in the comments below if you got allergies or the flu. If you do, then you know how I feel. But I got to talk about the world right now, what's going on, because this is going to impact our portfolios. It's going to impact our wealth, right? So we got to stay up to date. We got to definitely stay up to date. So some news came out, and I wanted to read it. Um, so we got a major escalation in the last 24 hours. The U.S. has threatened to destroy Iran's power plants if Iran doesn't reopen the Strait of Hormuz within 48 hours. Iran responded it will completely shut the Strait of Hormuz and attack regional energy infrastructure if that happens. This waterway carries 20% of the global oil. So its closure is a huge global risk. All right. So with this news that's coming out, my opinion for the stock market, we're gonna see more red. We're already seeing red, and we're gonna see more red. I don't think this war is gonna be, like I said in my last video, something that we're going to end quickly. Unfortunately, I think it's gonna last longer than what a lot of people were expecting, and it's gonna get worse. And what that's gonna do, it's gonna impact our portfolios in a negative way. Now, I've been in the market for over 10 years, long-term investing, and long-term is the key to building wealth. I started short-term investing last year. And the reason I want to say this, because everyone that's watching the channel, when it comes to being in the stock market, you're gonna be in the market right for different years. Some of you are brand new, maybe not even a year. Some of you might have been in the market for a few years to a lot of years, right? So for those of you that may be newer and maybe haven't experienced a pullback, one thing when I would find myself in a pullback in the stock market, I would look at the history. And what I mean by that, so like I'll use this example. We're in a war, right? And you see the market's pulling back. Go ahead and look, what does the stock market do when there's a war starting, right? And you're going to see that the market pulls back. And then find out, does the market recover? Type that in. And you're going to see that every war we've had, the market's pulled back at first, but then down the road, it recovered and went to new highs. And what that does, that eases my mind. That helps me invest as the market pulls back. That helps me not panic sell and sell good companies when it's on the low, right? If you got good companies in your portfolio and these pullbacks, what you want to do is you want to DCA into them. But you got to be prepared that if you buy shares, or better yet, if you already bought some shares last week, it's likely going into this new week, they're going to pull back a little bit more. If you buy some shares Monday, it may continue to pull back. The stock market could potentially pull back quite a bit. So you got to tell yourself that. So if you see it happen, you're already preparing yourself mentally for it. Now, there's some great opportunities out there. If you want to be a little bit safer, though, in moments like this, it's not a bad idea also to invest in some good ETFs that track the S&P 500. Now, I want to bring one to your attention, as I know a lot of YouTube channels talk about ETFs, but they'll talk about VOO, which is a great ETF, but it's around $600 a share, or close to it. And for some people, they get thrown off by that. So I'm going to bring one to your attention. It's SPDR. Okay, it used to actually be SPLG. I've had this one in my portfolio for years, done really well. And right now it's trading at $76.33. This will diversify for you. All you got to focus in is putting money into it, funding it, and over time, your money should grow. Now, I'm just sharing my opinion. I'm sharing what I have in my portfolio. Anything I say in this video is not a suggestion for you buy, hold, or sell. It's just me sharing what I think is a good investment for me and what I've been investing in. So I like to throw that out there. Also, Mag 7. I think the Mag 7 right now, it's on a discount. And one of my favorite ones in the Mag 7 is Amazon. Amazon, I've had since 2022, and I keep DCAing in. And I believe Amazon, it's been on discount, and it's on a larger discount with the pullback that it's going to continue to that we're going to continue to have, it looks like, in the market. So I'm definitely going to continue getting some more Amazon. Now, riskier place are going to be the small caps, because everyone talks about buying the dip. Everyone tells you, to buy when the markets are pulling back. Not every investment's going to take off, especially small caps. Because remember, when you invest, there is risk, right? Investing does carry risk. There's not always a guarantee you're going to make money. My portfolio, I've made some bad investments before, where they didn't go in the direction that I wanted them to. So you got to be prepared that sometimes you might pick a stock, especially a small cap, and it doesn't work out. I like to throw that out there because a lot of people talk about buying the dip. There's no guarantee that you're just going to buy the dip and it's going to go up, right? If you want a better guarantee of that, you get an ETF, you buy like Amazon, something in the Mag 7. But if you want to go riskier and buy a small cap on a pullback, that could pay off big time, right? But it is going to be riskier. So it's just like there is a bigger possibility of a reward, there is a bigger risk too of a loss. Because even though we are going to recover from this and times are going to get better, not all stocks are going to recover, especially small caps. So I like to throw that out there. But a small cap that I've been talking, if you've been following, is Serve, SERV. I really like this stock in the $9. Right now, it's under $9. And I think if it pulls back even more, imagine if it pulled back down to $5 a share, amazing opportunity. I believe when all this goes away, that server bodies could go back up to $15 a share. So imagine if you got it at 5. No guarantee that that will happen, but I think that's a possibility. So a lot of upside to build some wealth in your portfolio in times when the market's pulling back, in times of war, in times that things don't look the best. It's actually the best time to invest your money in the market. Okay. Even though, when you look at it, it doesn't look that way. So I like to say this so you're aware, hey, the market's likely going to pull back, but the stronger the pullback, the better opportunity to buy good companies, good ETFs. And when all this recovers, right, you got to be patient. You're going to build yourself some nice green in your portfolio as long as you made some good investments, right? That's good. That's the key. Hopefully, I helped you out. Wanted to come on here Sunday, warn you what's going on right now with the war, let you know there's a possibility Monday going to next week, we may get a further pullback. So if you've been buying last week, if you plan to buy on Monday, you may see your portfolio go further into the red. I wouldn't panic as long as you're buying into good things, good stocks, good companies. Hopefully, that's what you've been doing. If you enjoyed the video, do me a big favor, smash the like button. If you haven't done so, please don't forget to subscribe to the channel. Check out my description box. Got some useful links in there for you. I appreciate your time. I appreciate you watching, and I'll see you on the next one.